As China's economy shifts from high-speed growth to high-quality development, the consumer service industry, an important pillar of the national economy, is facing new opportunities and challenges. Xiangqian from
Harvest Capital delved
into the survival environment of small and medium-sized enterprises in 2025 during an interview. The return of cultural confidence and the future trends of consumer investment. He pointed out that when SMEs face challenges like rising labor costs and increasing rents, they must enhance their strategic positioning, focus on high-demand and high-frequency major sectors, and improve their competitiveness. At the same time, with the rise of domestic animation IPs like Neza and Black Monkey King, the return of cultural confidence has brought new opportunities to the cultural industry, including the reconstruction of urban cultural spaces, national trend brands, and the export of Chinese culture. In the field of consumer investment, Xiangqian emphasized that future consumer investment sectors will become more specialized, and going global will become a new direction for enterprise development. Whether it is the cost-effective overseas model or the cultural export model, enterprises need to have a profound cultural foundation and an international perspective. Finally, Xiangqian looked ahead to the next decade of the investment industry. He believes that specialized and vertical investment institutions will stand out, and long-termism and value investing will become mainstream. The following is Rongzhong Finance's dialogue with Xiangqian from Harvest Capital. How will the survival environment for small and medium-sized enterprises in China be in 2025? In 2025, the survival environment for small and medium-sized enterprises in China will experience structural optimization, where challenges and opportunities coexist. The impact from the macro supply side will persist, with rising labor costs, increasing rents, and climbing costs of production factors such as water, electricity, and gas. Coupled with the reconfiguration factors of the system, this leads to structural transformation, and the market has entered a more rational phase. The previous dividends from extensive growth driven by abundant resources are no longer present, replaced by a severe test of the core competitiveness of enterprises. Small and medium-sized enterprises need to see the era of dividends is over, and the era of entrepreneurs is here. Entrepreneurs need strong strategic positioning. Without long-term plans, short-term plans fail, and ignoring the big picture hinders managing any area. Entrepreneurs need to know their goals. They should guide the enterprise and make long-term plans focused on the goals of the company. Second, focus on key high-frequency needs. High-frequency products outperform low-frequency ones. Failures occur by capturing small pain points, traffic, and opportunities, which seem easy but limit future growth. Third, address shortcomings and enhance capabilities in all aspects. The future is an era of competition based on weaknesses, not strengths. In the early stages of a startup, you can rely on a single strength to quickly drive development. But to become a leading company, you must create a competitive moat. You need to hone your internal skills and comprehensively enhance areas such as product development, supply chain management, digital capabilities, channel building, and lean operations. Fourth, return to the essence of product strength and service. This is an era where good people do business, an era of earning money through hard work. Businesses must return to the essence of creating value for consumers. Essentially, a product represents the character of the entrepreneur, a good original intention, deep human insight, and creating a business model with humanistic value and care can endure over time. Lastly, cash flow management is crucial. Increasing revenue and reducing expenditure, making good cash flow budgets, and controlling leverage are key. Surviving is winning. Many high-valuation companies that cannot withstand storms have fallen. However, those companies that steadfastly focus on products and serving consumers can weather the cycles. With the rise of Chinese elements like Neza and Black Monkey King, do you think the cultural confidence of the Chinese people has returned? Especially with the support of local governments for the cultural and tourism industries, what investment opportunities are inherent in this? Cultural confidence is indeed returning, there is no doubt about it. The explosive popularity of domestic animation IPs Neza and Black Monkey King, and the rise of cultural consumption models like Zibo Barbecue and Shanghai's bustling nightlife convey a truth. Returning to humanistic values and embracing everyday life, a truly grounded cultural industry will appeal to the market. The public's demand for culture is shifting from existence to quality. This is a transition for China from a society focused on basic needs to one aiming for a moderately prosperous society, and ultimately a better life. Our consumption upgrade is reflected not only on the material level, but also on the spiritual and cultural level. From Maslow's hierarchy of needs perspective, once basic needs are met, people naturally seek higher levels of spiritual fulfillment. The investment opportunities contained within this include four aspects. First, the reconstruction of urban cultural spaces. As we have observed with the flourishing of flowers, it has sparked a reminiscence of Shanghai's history of struggle. Urban spaces should reflect the spirit and culture of its citizens. there are possibilities in the reshaping of urban civilization and spirit. Second, the rise of national trend brands. With the return of cultural confidence, domestic brands with cultural heritage will usher in a golden period. These companies possess both cultural symbol attributes and commercial value, capable of connecting the past and present and bridging East and West. Domestic brands are no longer just simple alternatives, but truly have cultural genes and products supported by quality. Third, the development and operation of regional cultural IP. The explosive popularity of Zibo barbecue and Xiaohua's haircut proves to us a good cultural IP can drive the economic development of an entire city. I have always believed that the key to driving economic development is to prioritize people's livelihoods. City managers should discover sustainable development momentum from everyday life and continuously optimize the business environment. Fourth, the export of Chinese culture. With the rise of national strength, cultural export is no longer just about exporting cultural products. The best way to export influence is through cultural export. The best form of cultural export is lifestyle, and the best expression of lifestyle is consumer goods. In the future, there will be more brands that embody Chinese culture to go global and gain worldwide recognition. Overall, the key to investing in the cultural industry is to return to the authenticity and vitality of the culture itself. It's not about simple concept hype, but about truly respecting history and tradition, while incorporating modern, innovative elements. Just like the shift from traditional consumption to innovative consumption, the essence of innovation is respect, which can only be achieved through a deep understanding of human nature. Only then can we create cultural products with vitality. Will consumer investment make a comeback in 2025? What about going global? Compared to the past, the consumer investment track in 2025 is narrower, with fewer players, higher standards, and stricter professional requirements for investors. We believe in the high-quality development phase of China's economy. The consumer service industry is an important pillar industry. From a macro perspective, the transformation of China's economy cannot be separated from the drive of consumption. Among the three main drivers of the economy, consumption is the most stable ballast. In 2024, the contribution rate of final consumption expenditure to economic growth in China reached 44.5%, significantly higher than the contribution rate of gross capital formation to economic growth. Secondly, China is the largest single market in the world. The demand for food, clothing, housing, and transportation creates rigid demand. China's rigid demand, combined with high frequency and livelihood sectors, is broad and the cycle is long, creating a long, heavy snow track. People always need to eat and dress. These basic livelihood needs are irreplaceable. In addition, the consumer sector often gives rise to examples of long-term value investment. From the development history of the US and Japanese stock markets, it can be seen that consumer companies are often more likely to become long-distance champions. These companies are not affected by sharp market fluctuations and can maintain steady growth during economic downturns. There will be two models for going global in the future. One is the cost-effectiveness model represented by Tianwushine, which relies on extreme cost control and supply chain advantages to create products recognized by global consumers, thereby establishing a new business empire worldwide. This model relies on China's comprehensive industrial and supply chain systems, as well as digital marketing capabilities. The other model is the cultural export model using consumer brands as a vehicle. As China's international influence increases, more consumer brands with Chinese cultural genes will go global. These brands are not just selling products, they are also exporting Chinese culture and lifestyle. This model of going global requires brands to have a profound cultural foundation and an international vision. Going global is not simply following a trend, but a choice made when a company reaches a certain stage of development. Blindly going global without understanding international market rules and consumer habits is unwise. Going global requires companies to have sufficient financial strength. Management capability and risk resistance are choices made after careful planning. Choosing to invest in consumer brands going global is about discovering those national brands that can stand out in global competition. We hope to help them become the Coca-Cola or McDonald's of China. Where is the next decade's opportunity for investment in China's Starbucks-like industry? What types of institutions can participate? What is the most basic investment logic? The next decade will be a decade of value return, a decade where expertise prevails. From a macro perspective, China's economy is undergoing a structural transformation, shifting from high-speed growth to high-quality development. The previous extensive growth model, which relied on large-scale factor input expansion, has reached its end. Future growth will rely more on innovation-driven and efficiency improvements. China is entering a new era of common prosperity for its 1.4 billion people, although the growth rate of consumption may slow down in the short term. But in the long term, the consumption trend of high-frequency essential needs will not change. Future consumption investment requires a deeper understanding of changes in consumer demand. Focus on brands and products that can provide unique value and which types of institutions can participate in this. First, specialized and vertical investment institutions. The investment industry is moving from a universal PE approach to specialized division of labor, and those who can stand out in the future are those institutions with deep accumulation in specific fields that can truly empower enterprises. Second, investment institutions with an industrial background, as investment logic shifts from arbitrage to industrial upgrading. Those who can understand the rules of industrial development. Institutions helping firms improve operational efficiency will be more favored, with industrial resources, professional knowledge, and operational experience, making them business partners of firms rather than just simple fund providers. Third, investment institutions' long-termism. Value investing takes time. Only those institutions that stick to long-termism can reap rewards. Investing is counterintuitive and needs discipline and patience. The most basic investment logic has 2 points. First, investing is a study about people, buying into industry growth and buying into enterprise growth. Believe in the learning ability and character growth of entrepreneurs. Value investing is the king's way. Valuation is not equal to market value, and market value is not equal to intrinsic value. In the short term, the market may experience irrational fluctuations, but in the long run, a company's stock price will eventually reflect its intrinsic value. Time is the weighing scale of a company's value. Profit is the byproduct of doing the right things. Third, invest in goodness. Investing is not only about obtaining financial returns, but should also promote social progress. Investors need to weigh the social value and environmental impact of their investments. I have always believed that this is the era for good people to do business. In the era of earning money, those companies that can create real value for society will earn market recognition and rewards, maintain reverence, and adhere to professional boundaries. On the path of investment, there are no shortcuts. Only through hard work can one succeed. Only then can true mastery be achieved.